This market is a lot like food. Food, you may ask. Why is it like food? Well, if you're a picky eater like me, you either love something or you hate it. You either can't get enough of it or you push it away. That's this market environment. We got stocks that are loved and stocks that are hated. Commodities, throw that in there too. You know what I'm talking about. Let's cover some earnings reports, some a little bit earlier than expected. Let's talk to Todd Gordon at 8:35 a.m. Get his perspective on the markets, which is always good. Folks, can't be a turnaround Tuesday because we rallied yesterday. We're rallying today. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Straight up from that closing price, 0250. That matches the low of the day, up 17 handles, 701950. Trying to make a new all-time closing high. The dollar futures flat at 97.46. TLT flat 86.52. USO trying to recover after that bad day yesterday, up 34 cents, 75.67. We got the rebound we wanted in gold and silver. GLD up 5.5%. SLV up nearly 9%. But you know what's not rebounding? Bitcoin. That's up a smidgen, 0.4%, 78,515. These charts, this information is brought to you by TradeStation, born to trade. Chart, analyze, customize, program, all-in-one platform. Get to know TradeStation. Let's bring Triple D to the stage here on this February 3rd. And do they have Canadian groundhogs?
Yeah, they do actually. And you want to know something? It conflicted with what I never can say. How do you say that town? Punxsutawney. But there is Wyerton Willie. Wyerton Willie we have in Canada. And Wyerton Willie actually predicted an early spring. So he totally went against Punxsutawney Phil. Yeah, totally against him. So Wyerton Willie. That's funny you bring that up because I was thinking about that yesterday when I saw Wyerton Willie's official prediction. But Wyerton Willie is going 100% against and saying that we're going to get an early spring. I believe that Wyerton Willie could be wrong since the snow is continuing to fall here outside my window. But I like what Wyerton Willie.
Well, his opinion is tariffed in the United States. So
that was good, Joel. Actually, it's tariffed.
Okay. So with every move, there's a counter move, and holy mackerel, gold and silver absolutely exploding here. SLV, let's look at that one first. That made a little bit closer to a double bottom. We called it out yesterday on the Stock Trader Network. Love these kind of moves. Love these kind of formations. Love to keep it simple. We will just use the 50% retracement, folks. This is all that matters, 50%. Now, if you're new to the show, every move has a counter move, and the lower the move, it's just under $70. Halfway back in this, man, 89.20. So the longer it takes to get to 89.20, the more I'm thinking you're seeing a long-term top and SLV. GLD chart doesn't look as bad. That's got to get to 565. So if you're a rah-rah bull, you bought the dip, you think we're going back to all-time highs, the path is to get back half of this move and show support. That's my take on the metals.
You got to classify all stocks, commodities, everything now. You got to classify them into the loved camp or the hated camp. And what you want to do is be buying dips on the loved stuff and selling rips on the hated stuff. That's where you got to be. That's where we are. Obviously, we see a dip on SanDisk and Micron yesterday. I thought, maybe this is the start of a pullback. No, because these are loved. Hardware, for the most part, so let's just talk, hardware, software. For the most part, hardware is loved and software is hated. Now, there are companies that have software and hardware, so they're a little bit trickier. But you think about the pure software companies, the annihilation that has happened in some of these names. And then you think about the hardware and memory, going back, and like, so I think as we go forward here, we always, in Stock Trade Network, we're all about lists. This Brentster, bring Brentster in here because I want him to write this one down too. Brentster, good morning. Brentster coming in here for a second here.
Good morning.
We need the new list of loved and hated.
Oh, wow.
Sometimes they're going to fall into the middle and then you don't have to do it. But there are clearly loved stocks and clearly hated. The most hated stock right now, out of all of them, I think, like at all the main names, like we're not talking tiny stocks. We don't look at that crap. We're talking like the main companies that everybody's talking about. It's got to be Oracle. Oracle's got to be one of the most hated stocks. Gets good news yesterday, starts rallying, and then Joel asks, what the hell happened to Oracle? Oracle happened to Oracle because Oracle only goes down. So it doesn't even matter. I own some shares in my long-term portfolio, which I feel like just getting rid of them all. Because you know what? This stock is the most hated stock. When your stock's selling off on good news, you know it's hated. It's down again. And this is just not Oracle. And Oracle is database software. Software. You can say the AI spend, they're trying to recreate themselves an AI company. Well, that's not out till 2030. The market's not waiting around that long. Right now, they're scared about the spend and they're scared about their core businesses. ServiceNow announces fantastic results. Stock goes up. Doesn't hold the gains for more than a couple hours. CEO goes on CNBC, has a whole rant on how his stock is so underpriced and it's going to reprice higher, and then everybody in the whole world should be buying a stock, including himself, and saying he's going to buy too. Stock continues to leak, not going up. Look at CRM this morning. Market's rallying here today, folks. CRM down another $4. Workday down another $2. Hated. These are hated stocks. And then you have things that are absolutely loved that just cannot stop going up, like SanDisk, like Micron.
How about Tim Quash yesterday when he talked about this stock?
It's a 10, and it keeps going. Shout out to Tim. Fantastic call. I was like, you know what? I saw it sell off. I was like, well, they're starting to sell off these names. They're going to start selling off everything. Now, it's a one-day event, and they just come right back into the loved stocks. So, got to look, loved, hated, have your categories, and some of them fall in the middle, and those are trickier. You don't have to classify those. But you sell rips on the hated, you buy dips on the loved. That's how you're making money in this market.
And one might say, Denny, but where do I find these watch lists? Well, you got to subscribe to the STN room.
And we're starting to create them. And let's start creating them right now because I got one for you.
I already added them. How about that?
He's adding them right now. We got the Brentster going. But let's go into our earnings because this is easy. PayPal. Well, that's what's been hated for. That was hated before stocks were hated. PayPal's been hated for I feel like 5 years, this stock. When was the high? Yeah, 5 years ago, $300 a share. Everybody's got their own payment systems. I don't need PayPal. Holy crap. This is a disaster of an earnings report. But the stock is absolutely hated. Even if they would have said something good, stock may have rallied for a day and then just sell off here. But the Brentster, if you've got the earnings in front of you, give them to us. I mean, they just hate this company big time.
Well, they missed for the quarter. That doesn't help. They reported $1.23, a 5-cent miss. Sales coming in at let's call it $7 billion. Analysts were up at $8.8 billion. They gave a little quarterly and fiscal year guidance. They're expecting earnings on a year-over-year basis for Q1 to be down in the mid-single-digit range. They're also expecting 2026 earnings down in the low single-digit range to slightly positive. So I guess if you're looking for any silver lining in PayPal, it's that they are expecting potentially a slightly positive earnings growth for the full year this year.
They're hoping for. Stock's not sitting around here for hope games. This is the new. This is new 8-year low on. I only go back 8 years on my chart. So is it farther than that? New breakdown, new lows.
Yeah, well,
well, that's the same. 8-9-year low.
8-9,
PayPal. When your stock's making when you have a market that's relentlessly higher, making new all-time highs, and you have stocks making new 8-year lows, your stock is hated. Take it, put it in the hated camp. It's absolutely hated. So I don't know why you have it in your portfolio, but we can tell you simply, when your stock is going down in this market, it's a piece of crap. It's garbage. Garbage stock. Is PayPal a garbage company? To be determined, but it's a garbage stock. So, what turns the story around? Maybe nothing. We've tried turning the story around. Got the January effect, little trade, little couple days of hope. Now it's PayPal. Hated it. Hate.
I revised my downside target for today from 40 to 42. And the only reason is I have 2 monthly lows right at flanking 42. This was back in March and April of 2017. So a couple monthly lows. The next monthly low after that is 39. Got another double bottom on the monthly at 39.30. But did you know that I'm from my personal accounts, I am banned on PayPal. I don't know what happened.
What did you do this time?
I don't know. This is going back years. So I don't know what it was. I don't know. I was banned, and so that's it. That's for PayPal. Drag it down.
Joel.
XYZ with it too, right? What's the name of this company? Black Square.
Why?
Right?
When you got to change your name every other year and you change to stupid things, you're in trouble too. PayPal, XYZ trade together. So no, not surprising. It's down 3.5%. XYZ hated stock. Stock was $250.21. It's sitting near 7-year lows too. Same thing as PayPal. Both hated. These payment stocks, what do you need them for? I mean, it's going to get, and again, AI is probably going to make this simpler too. But there's so much competition in this space. The payment space is just full of competition from everywhere. This is just not like the growth area and like, oh yeah, payments, that's what I want to invest in. Now, the market is investing in certain themes. This theme is not it.
And remember when they were crypto stocks? Remember? They like you had to have these for crypto and then participated. I mean, I don't know. Crypto just kept on going, right? But they didn't. Remember, that was back in, I think that was back in the old office. Remember when there was the affiliation between crypto and these stocks?
Yeah, well, they were trying to be a crypto. They were like, oh, this is a crypto company because they can accept crypto payments.
Correct.
It wasn't a crypto company. It's a stretch. It's a stretch. But the market
was
started like, when we were all crypto crazy. And we were 3-4 years ago, and even a couple of years ago, even last year, it was like cool to, you wanted to have any association with crypto. Companies were coming out just saying crypto, and the stock was going up 50%. So, they were on that bandwagon there too. It's gone. That ship has sailed. Crypto's in the gutter here now too. Can crypto turn around eventually? I think so. But right now, crypto is not liked either. So I wouldn't say it's as much as hated, because some stocks are absolutely hated. But crypto is definitely not loved right now. Breaking down, not participating. We can just look at the charts and say, crypto is, I wouldn't put it to the hated camp yet, but right now, definitely not loved. Now, on the contrary, let's go to gold and silver, because gold and silver is still loved. Gold is still loved. It had a hell of a sell-off, and it really got, you could say, oh, it went from loved to hated instantly. I wouldn't say that gold and silver are hated at all. And when you get a 30% sell-off, and we were talking about silver the last couple of days, I've been buying the dips on silver in the STN room. I think, it's like there's bounce opportunities here. How do you know when your stock commodity is loved? When it snaps back violently. And that's what we're seeing with silver here this morning. Silver's up 10% this morning. That's a nice pop. So I think on dips, I think you're looking at buying silver. So again, going back to the theme, selling rips on hated stocks, buying dips on loved stocks. You could say SLV, commodity, you can throw it in the same thing. I think silver and gold are still loved. I'd be buying the dip. Now, again, this isn't a dip today. Yesterday was a dip. This is a rip. So maybe we get a dip later today. Nothing goes straight back up. Keep that in mind, though. Fun segment. Let's go to another earnings report, Teradyne, which this one is clearly in the loved camp. Why is Teradyne loved? And if you don't know what Teradyne does, let's just go ask our trusty AI assistant who's on everybody's desk. Teradyne and Micron. How are they related? Teradyne and Micron. Maybe people didn't realize that Teradyne's related to Micron. Well, Teradyne and Micron. So Teradyne actually makes the automated test equipment that is used to verify the functionality of complex semiconductors. Micron relies on such high-end testing gear for its memory products, particularly high bandwidth memory. This is all from Gemini, which requires rigorous testing to ensure defect-free performance in AI data centers. I didn't even have that ready. I literally just asked Gemini, and it spits me out that answer and makes me sound like a genius in 2 seconds. But bottom line, this company makes testing equipment that tests all of Micron's chips. So this is a derivative play of memory. This is literally going to have way more demand when memory prices are flying. So Teradyne comes out, blows earnings away, because this is totally, I used to pair trade Micron and Teradyne together. So we were talking about this in the STN last night. Teradyne, not surprisingly, blows it away. The market, though, is surprised because the market's too stupid to figure anything out, and it's up 23% here today. But wow, if you were on this, what an opportunity here. Teradyne earnings incredible, and that's thanks to the memory run that we've had.
The quarter was strong here. Earnings of $1.80 beating $1.35. Sales over $1 billion. Analysts were looking for under $1 billion, but it was the guidance, in my opinion. This guidance is mildly SanDisk-esque, if you ask me. Q1 earnings per share,
That's
189.
Verb.
we made SanDisk a verb. Earnings 189 to 225 expected for the quarter. Analysts all the way down under $1.25. Sales also really strong, 1.15 billion versus 1.25 billion. Analysts around 93 million for Teradyne's Q1.
There you go. I mean, this loved and hated. Teradyne making software, or not making software, making equipment, hardware that tests the chips, that tests the memory, tests it all. I mean, this is just involved with everything. So hardware companies, which Teradyne's mostly, loved. Teradyne, Micron, one of their biggest customers, sounds pretty awesome. Probably not a bad idea to look up what other customers, where's other Micron buying stuff from? Because those stocks are probably going to do pretty good too. If you have them in the chat, let us know. Teradyne was a fairly obvious one. I'm sure there's other derivative plays here, though. There may be some stocks that haven't gone up as much because Micron and SanDisk, this rally is just incredible.
This is an interesting one because what was the one that was you don't know if you're going to get SanDisk, right? When it went up and then it came down and then it went right back up, right? So you don't know if they're going to take some profits in this thing. What we always like to do when we see this kind of scenario is to see if you could get to the pre-market high 312.90. Pretty good volume traded there. That's only $5 away, so that hits the spot. We'll see if we can get to the pre-market high. Coming back on the downside, if you ever see 255 again, which you may, SanDisk came all the way back down. That's a double top. At the all-time high.
It comes back down there. This was one to get it back. I mean, probably want to be buying it.
Did you think SanDisk was gonna come
No,
back
it gave
up?
us all a shot, and that had me spooked. It had me spooked on the overall market that day because when they were selling off, and that was just market effects bringing it down, throwing the baby out with the bathwater. Hindsight Capital's 2020, looking back to yesterday morning, that was throwing the baby out with the bathwater, and the baby is SanDisk and Micron. Those are the stocks. Now again, this is cyclical business. So, there's nothing, RAM prices aren't going to go up forever. There's going to be a pullback here eventually, an inevitable pullback. And we've had lots of little, silver and gold are loved, and yet they had silver at a 30% pullback, in one day, basically. So that can happen. The rug pull can happen, but, silver's getting bought right back up. You're going to have better luck, though, buying dips on loved stocks than you're going to have buying dips on hated stocks. And if your stock's at a 52-week low, it's hated and probably going lower. Continuing on our happy love-hate relationship with this market, Rambus. I mean, this was another earnings report from last night. Stock getting hit. Has a lot of software in there. Now, has some other businesses too, but you don't want to hear anything with software in it right now. Software is so hated. So Rambus here trading down Count it bounced from the lows a bit here. We were worse last
Holy
night.
mackerel. Did you see
Yeah,
how
it's
low
been a
this
decent
got?
bounce. How are the earnings?
Earnings were fine. They reported inline earnings at 68 cents. Sales a slight beat here. They beat by about 3 million bones. Q1 sales expected week here. 171 million to 189 million. Analysts are up over 189 million. Quarter fine. Guidance not so hot.
I think you're throwing Rambus back into the hated camp. Now, again, maybe this one's in the middle. We'll give it some love. We'll just say it's in the middle. Maybe you can't classify. You're not going to be able to classify every stock as loved or hated. You know, there's always like in the middle. This is kind of in the middle, but I don't like when I go Google and I see software right away. I don't want to see. You go to AI. What did the company do? And if the first line it says is software, already a red flag. Already a red flag. You say, well, this software sell-off's overdone. Is it? Because it keeps getting more overdone. So I'm starting to believe maybe that AI is going to be replacing a lot of software companies or replacing a lot of businesses of these software companies. So I'm not sure, but I get scared when I see software now. Right away, red flag.
Okay, we got to do a little learning moment here. Okay.
Please.
And didn't you fear, like when you were in school and like all of a sudden, like they came on the announcement and they said your name and you need to report to the office?
This is only you, Joel, but yes. Joel is always in trouble.
No, not always. No, it could be, a family emergency. You never know.
Please report to the office. But 99% of the time he was bad.
Yes. Yes. Okay.
That's why you had that fear. See, I was a good student. And when they said my announcement, I automatically assumed there's a family issue or there's something going on. Because I was a good student. Did all the bad things you did.
No, I was a great student. That allowed you to do more bad things. You don't understand.
Okay, I heard it.
Okay. If you hit this stock anywhere $90, 88, what do we got here? On the daily, you had a low at 88.50. You had a couple other lows back in this area. If you hit that stock at $90, report to my office. You email me, Joel@StockTraderNetwork.com, and we're going to have a little talk. If you hit that, if you bought it there, then send me an email too. And I'd like to figure out why. Well, I know why you bought it. Look at all that support there. We bounced $15. Forget about these gap fills. The thing I like to look at, these are probably stray 8 o'clock prints that took it up to a little bit higher. 105, that's like a quarter star resistance right now. We'll see what happens at 105 in Rambus.
So then earnings this morning, and we can do the same thing. So we had PayPal already, but we can do the same thing with loved or hated. Let's go to Pfizer. I own this in the long-term portfolio. I'll say this is hated. Hated stock. All the drug stocks have been on fire. All the drug stocks have been going up for 3 months straight. We've had stocks like Merck, Bristol Myers, Lilly, Novo, been, on fire as well. And then you have Pfizer. It might be the most hated drug stock on the planet. No matter what they say, no matter what they do, no matter even if they beat earnings, even if they affirm their guidance, which they're doing here this morning, the earnings beat was pretty nice for Pfizer. 66 cents versus 57. 17.55 billion versus 16.95 billion. They affirm their guidance. They're going to make $3 this year, 280 to 3. And you got a $26 stock. So it doesn't take a lot of rocket science to figure out it's trading like 8 times earnings. It's got a 6.75% dividend. What's not to like? You know what's not to like? The market just doesn't like you. And the market chooses who it likes and who it doesn't like. And unfortunately, Pfizer is in the hated camp, the most hated of drug stocks ever. I can't bring myself to sell it because it sounds like so low that, I figure they're eventually going to figure it out. They're not software. That's a good thing. But crap, man, this stock is hated. Joel, talk to me about the technicals.
Well,
here.
first of all, Brent, do you have breaking news?
On?
Don't we have a some kind of thing all these years during the show? We don't have a breaking news thing?
No, we should do that. Breaking news.
Breaking news.
I convinced Lisa to sell this yesterday.
You sold Pfizer.
I sold Pfizer. I'm out.
Really? Okay. Well, give me the thesis because I've owned Pfizer in my long-term account for like 20 years, 15 years.
We were just looking at a bunch of stuff, and it's not only like the recent. It's just gone nowhere for 100 years.
Yeah, pretty much. Yes.
We've had some, we've over the years we've played it okay, but it's just not a huge position. I'll update the sheet on Stock Trader Network with my positions in it, and it's just a loser. It's always nice to book some losses somewhere, right? Because if you ever do sell anything, you can keep the losses moving on for years. So not really like an end of the year play. But it's gone nowhere. The dividend's gone nowhere. Bought it bad, so it's out of Pfizer. So
I
get
bought
ready.
it well. I was averaging at one time like $13 on this stink
No,
stuff.
I did one.
But you know what?
Yeah.
When you add it all up, and you did that 20 years ago, you're not even keeping up with inflation, even if you're getting a dividend here. So I even bought it well, but then I bought more, and then I brought my cost average up, which was a mistake. Never raise your dollar cost average, and now it's like, I think I'm actually still green in this thing, or I'm slightly red. But I mean, I bought it well, and it still sucks because even if you're making money and getting the dividend here, you're not making enough to keep up with inflation, because this stock, like you said, Joel, it's been a dog. You want to know when the all-time high? I can remember this stock. Pfizer, go back. Your charts won't go back far enough, but you got to go back to like the tech bubble burst. This stock, I believe, if I'm not mistaken, hit $60 back in like the year 2000.
It got back up there.
It did get back up there.
Yeah.
Actually, so it got back. But now if you look, we hit $60, I think, in the year 2000. We're 26 years later, and the stock's down 50% from where it was trading the year 2000. Now, I had no business trading 50 times earnings like everything else in the year 2000. But wow, I mean, what a dog this has been. I think I bought it after the financial crisis, so I joked 20 years. I think it's been 12 years or 13 years, but been a dog, been a bad pick.
And I want to give it.
Sometimes you just got to deadhead that portfolio. Just get rid of the junk.
Cut it out. Just cut it out.
Deadhead.
And to your point, Dennis, I want to thank John Higgins in the STN room for giving us a heads up that while Pfizer announced their earnings about 5 minutes before, they had some data for their injectable GLP-1 drug candidate, which the trial met the primary endpoint. As far as I can tell, this is good news for Pfizer, and this is in the weight loss space. This is probably one of the most in focus spaces out there for healthcare names. That being said, the focus is on the oral GLP-1, right? The oral weight loss drug. This is the injectable one, but here's more good news.
Like holy crap. Go Brent, but I want to
I was just going to say more I was going to say more good news, some good news for Pfizer, and the stock still being sold.
But all these bloody companies are now moved on, and we're moved on to oral. Novo, Lilly got it going on.
They're still doing injectable.
Oral. They're still trying to figure out how to do an injectable. Lilly had this 4 years ago. Well, what the hell? They should have went and bought somebody else 4 years ago. Maybe they'd be farther along. But the company, obviously still is a cash cow. Obviously still makes a lot of money from their core businesses here. Supposed to make $3 a share and has a nice dividend. But man, this company has not innovated at all. And that's why Pfizer continues to remain in the dumpster.
Can we do a love stock?
Yeah.
Wasn't there a song? Love stock.
There's a lot of love songs.
B-52s. So yeah, that's the B-52's best song.
Oh, that's
Love Stock, baby.
Love Stock, baby. What do you got for me? What love stock you want to go to? Or you just wanted a love stock in general because we just had like 3 hated stocks in a row.
Yeah, just bring the optimism. Yeah.
Well, we had Teradyne. We did Teradyne. That was a lot.
Oh, we did. All right,
SoFi we could do, but that's going to come up in a ratings section, and that's typically a loved stock, at least by the retail community, is bouncing here this morning. But no, I don't know. Some can go from hated to loved. Like Merck is starting to become more loved, and Merck had earnings here this morning, so we could talk that one. This is a segue into there. Go ahead.
Have we done Palantir earnings yet?
Well, here's a tough one. Let's do Palantir, because this is a tough one. Because Palantir is the most loved stock in the retail community. We know this. It is like the king of retail, can trade 100 times sales. They don't care. They love this stock. So, Palantir comes out with earnings report. And actually, we had a trade on this in STN. And I said last night, it's so beat up. I'm like, if Palantir says anything okay, the whole bar, probably going higher. So I actually don't usually do this, but I took it long intentionally, bought it, at the close intentionally to take it long into the report.
And you
I
sold
flipped
it
it
too
out
soon.
about 3 minutes later for 12 points. It's
Wow.
continued to go higher here. Lots of analysts upgrading it here this morning. Palantir has been a victim because they are a software company. But is this one of those companies that has been thrown out baby with the bathwater? Is this one that can figure it out? Well, that's a question. Brentster, how was the report?
Report for the quarter was solid. They reported earnings 25 cents, a 2-cent beat, so modest there. Sales were solid though, 1.41 billion versus 1.33 billion. Guidance, company looking for fiscal year 26 sales. Here's where some of the strength is in their 2026 sales. Expecting 7.18 billion to 7.2 billion. Analysts all the way down at 6.2 billion. Quarter, fine to good. Guidance, really good. Alex Karp sends a letter to shareholders in tandem just before the earnings press release hit. And Alex Karp, he would speak with conviction about the company, of course, CEO of Palantir. But some of his commentary in this letter were like extremely convicted. It starts like this: we are at the outset, the very beginning of a generational project. Our financial results, those crude and imperfect metrics by which a market filled with both excitement and fear attempts to assess the value of the companies it covets, have again exceeded even our most ambitious expectations. Call was fine. The call was, optimistic. The stock started selling during the call. I think it was kind of just like a sell the news sort of moment, less about the quality of the call or the results, and more, I think there was probably just some algos kind of waiting for the call to start so that they could sell.
Smoke Tuna says that the best CEO really knows how to talk to investors. He can talk. He talks the big talk.
He talks the big talk.
And they like that. I think I could still put Palantir in the loved category. So when you get, a stock down 20, 30% and it's still a loved stock, it's probably a buy. Now, this is not like saying to go out and buy it today. This is a rip. We buy. So remember the original formula we started with. We first classify stocks as hated or loved. Then we buy dips on the loved and sell rips on the hated. That's your equation for success. So if we classify Palantir as a loved stock, the recent dip was a buying opportunity. Maybe you get another one. You probably do. But I think more, that this is in the love category than hated.
Short-term levels, the 169.44 is your January 27th high. You also had some daily highs right at that area, 170. But the absolute crucial number for this, like 50% retracements or not, 176. You got to fight your way back to that 50-day moving average. You got to fight your way back to that 176. You got to prove we're not done. Take that back and go back to green and round. Up a lot. I'm not sure. What was the expected move? I should have written that down. This is over the expected move, right?
Was it like $15, Dennis? Do you remember?
I think it was around there because that's what
I went. Don't quote us on that.
Like,
you know what?
It's
very important when you exceed this expected move that you hold the expected move. So let's say it's 15.
And that's good.
Yeah. Let's say it hold that. But we got a special guest lurking in the background here, and I want to bring him on. Can I bring him on a few minutes early?
Sure.
Yes.
Let's do it.
Todd Gordon, locked and loaded in the trade cave. That is a nice looking place. Todd, how you doing today?
Good. I don't know if I'm ready to be singing Love Shack though. I'll tell you what. I love better than Joel. Oh, here we go. The boys are fired up, and Triple D is on a rant as Brent is texting me.
So loved and hated. This is what we've done. We've said a love-hate relationship is the name of the show, and the whole theme is you have loved stocks and you have hated stocks. And you buy the dips on the loved and sell the rips on the hated, and that's where this market is at. And you can have the greatest earnings report at all, but if you're in that hated camp, the rip probably gets sold, like ServiceNow.
I'm frantically trying to pull up the expected move in Palantir for you. I had $14.35 on toss. So that's your plus and minus one standard deviation. We closed at 147. So whatever, 147, 157, 51 was a plus one standard deviation. 61, and we're trading 65. So there you go.
All right.
So let's continue this theme of loved and hated stocks here, Todd, because you're looking at charts. You've always got, your stocks lists as well. What are you looking at? Like, where's your loved list? Give us a couple stocks that you said, hey, man, I like these stocks. I think the market likes these stocks. These are on the love list. You got anything for the love list?
I don't love anything. I mean, we've increased some allocation. I mean, I like the market. I think, falling back in the technicals with the indexes, I mean, it's really important to realize that, NASDAQ is unchanged since the last week of October. I mean, I'm sure you guys all know that. And, just using that triangle consolidation idea, like, it's only going to break when enough traders and investors get frustrated, throw enough hands in the air and say, I can't figure out this freaking market is when it rips. That's when it goes. Are we at that peak frustration? So it's like, I've tried to put some of the love names on there. We are still seeing interesting growth names that are trying to play breakout, and, they look great. I put the trade on, I put a, 7, 8, 9% stop, get stopped out. Because again, that overall arching theme of the index is sideways. So I really want to put a big caveat on that. What's going to finally break us out? I don't know. There's so much just overhang in the market. It seems like it's a very bearish market. A lot of bearish sentiment, a lot of macro headline, domestic political uncertainty, like, new Fed chair, commodities, crypto. There's so much going on. But again, within the consolidation, we're only 1.5% off all-time highs in the NASDAQ. So that's where we are. If I could start high level, if you don't mind.
Yeah. Well, high level can be loved too. You can have Qs as loved. You can have Qs as hate. I mean, eternally Qs are loved. This is still a tech-driven market, and Qs are still loved. So I think when you're talking about a sideways market in the Qs for 3 months, probably resolves to the upside eventually. Like, like maybe something happens geopolitical and it goes the other way. But absent of something crazy happening, which in this world can happen quickly, we probably resolve to the upside because people love tech stocks.
People do. People love tech stocks. Like Dennis, I went, in my growth portfolio at Inside Edge on December 17th, when it was trying to break down through the lows. I didn't like how we were finishing the year. So maybe Santa Claus rally is off. I went to 20% cash in TAG, which is our flagship growth portfolio. I still have some pretty juicy stocks in there. So I was worried that even with 20% cash in the sidelines, I'm going to underperform the benchmarks, but we've kind of, knock on wood, held in there. I'm watching to redeploy this 20%. And every day I say, this is going to be the day that I put it back in. And then we have this false break back in the range. So I think ultimately I got to stop being a little too cute with that 20% allocation of cash. But again, high level, we're seeing this weird rotation into value, some cyclicals, and then we have small and mid cap growth around, while large cap growth is kind of is in timeout. So it's kind of a confusing market from me. Maybe I'm not seeing things properly, and that very well could be the case.
No, confusing market for everyone. I mean, Cramer, I don't know if you watched Mad Money 2 nights ago, but Cramer officially took the Mag 7 and said the Mag 7 is dead. He's like, it hasn't moved anywhere for 6 months, and he was done with the Mag 7. He's officially, he says, he was the one that created, his whole FANG trade and all the other ones he had going on. He officially declared the Mag 7 dead. So I mean
that's it's really hard to do. Google is at all-time highs. I held that in my Fast Money account. Google looks great. NVIDIA is just completely sideways, a $4.5 trillion company growing 50% EPS a year. It's hard to say that one's in timeout. Apple, did you see the technical pattern? Apple sort of a little pulled back pretty deeply, a little inverse head and shoulders, ripped on the upside yesterday. Throw some trend lines on Amazon, big old kind of triangle.
Doesn't look bad.
No. So no, I think that's wrong. Microsoft is in trouble, as are a lot of the software stocks, which you guys have been talking about. I was listening to Palantir. I have positions all over the place in Palantir. I was looking at that quarter. Software is in trouble, and the whole thing is if the market's talking out of one side of its mouth saying the AI bubble is here, and can they get an ROI and the massive CapEx spend on AI, And the market, I think the consensus is saying no. I don't know. There's no way to judge that. But why are software stocks getting hammered? Because of AI, yes. Right? They're like, so it's like, well, which one is it? So ultimately, I think, I think we do resolve higher. I think we're still in a massive generational bull market. I think there's going to be a lot of companies out there. I mean, look at the memory and storage rally that we just went through.
The most loved has ever been. I mean, that's the one thing is like this incredible move in SanDisk and Micron and Seagate and Western Digi. Now we can throw Teradyne in the mix here too. These stocks are the most loved ever. This is why we started this segment, was almost for these stocks, because as much as software is hated, these memory names have never been more loved. These are cyclical businesses.
These are cyclical, but it's like, but what the market's doing is it's sniffing out supply shortages. I mean, we could talk about, I've got the list I sent you guys of 9 different things in any different direction you want to go, but it's like, the silver gold ratio. I used to trade for an FX hedge fund during the GFC. And like one thing we looked at, I learned from guys who are probably 15 years retired at this point, is the silver gold ratio. That's like a 1970s global macro relationship. Silver gold ratio moving up is bullish for equities long term. If you look back at a chart to the 70s. So it's like, why was silver rallying so much? It's a shortage, and it's an industrial component demand within the AI build out. Right. Like, so I think the point that I'm making, Dennis, is like the market is sniffing out areas of shortages that they're just not focusing on to build out the infrastructure. Energy starting to come back. Look at like Vertiv starting to look better. I put Bloom Energy on. Like, there's so many behind the grid sort of data center themes that are being sniffed out. Like, what is it going to take to wire it up? With copper looks good. I mean, the hardware, the infrastructure for the AI play is still there. So it's like, I have to stay bullish.
What about Bitcoin?
Oh God.
That's the initial reaction when everybody asks about Bitcoin for everyone now.
I've come on here, guys, and I interview you too, because I really respect you guys as traders and investors. And if I was going on CNBC today, I would have called my producer and I said, what's the temperature if I mention the very notorious character who was just associated with Bitcoin and the identification of the 5 programmers behind it? Is that something I should bring up? Is that something you guys would talk about publicly, or would you skip that?
We'd probably skip it. It's probably getting above our pay grade.
Okay. I think that's fair. So, I mean, I think that got out, and it's as long as 77,000 holds in Bitcoin, I think it's good. I look at MSTR, it's right on the lows. I mean, I think if you start breaking 75,000, it's problematic. So, it's got some negative press out there. At the same time, you've got Warsh coming in, who's a shaker guy. He's from upstate New York, about 40 minutes away. He's anti-QE, I think, which is, probably another reason that this Bitcoin sold off so much. We do have the dollar holding support. And I think maybe on a positive side, you look at Warsh. I mean, he's buddies with Druckenmiller. So, Druckenmiller is going to have a say in what's going on here with monetary policy. You've got Besson, who's a Soros guy. So, on the positive, you've got 2 very market-oriented focused guys in the government, which I think, looking over fiscal and monetary policy, which I think is a very positive thing. So I don't know what to do with Bitcoin. I hold a little position in IBIT in the growth portfolio at Inside Edge. I love the story. I mean, I like the story. I understand the story, but the technicals got to hold. Technicals always have to trump your fundamental story. And again, that line in the sand is about 77,000.
Go ahead.
I mean, we've lost, so much in market cap from that all-time high, right? But the market is continuing to go higher. So what if it loses another $500 billion in market cap? Is that, I mean, are we just blowing up a lot of people that, mortgage their house, a second mortgage to buy it?
Right.
Or is it a good thing because the money's going to come out of Bitcoin and go into stocks?
I've been doing this probably long enough to say with confidence, I don't know. I mean, we've had 2 significant. What's that, D?
So that's sometimes the best thing to say is I don't know.
I don't know. I mean, how much there's been 2 major washouts in crypto market, in the last 6 months. So, I mean, there's a lot of excess out there, but I mean, again, I think you got to look at MSTR. If you did an overlay, I think I brought a chart to you guys last time I was on, or 2 times ago, like MSTR put in a lower high, and then Bitcoin, like 6 months later, put in a lower high on like a weekly chart. And then the NASDAQ finally rolled over. So it was acting as a leading indicator. MSTR kind of started the whole thing. If you look at it over the last 5 years, or maybe 3 years.
Joel, bring that.
Yeah. You know what I'm saying? Like, it's hard if you do MSTR over Bitcoin.
Hated.
What's that?
Hated. The love hated. MSTR is one of the most, maybe more hated than Oracle. Really hated.
And Oracle, I'm interested on the pullbacks. So I think about 25 minutes ago, you asked me a couple stocks. I like Bloom Energy. I mean, I just added it to our Fast Money account, put it back on. I've been adding to the position. Again, sort of these, I think they call it BTM, behind the meter plays are real. Oracle's, going to raise a bunch of money through the debt markets. Bloom looks good. I think this company's looking to go EPS positive in 2026. I think GAAP positive in 2027, which is a far cry from where it's been. I like Bloom. Again, I think Palantir looks great. I mean, the guidance going forward was unbelievable. I think the tipping point for Palantir is like when they do more more private sector revenue than government revenue, which is getting close. I have the numbers over here. So, it's a software stock that's held up quite well within the software stock sell-off. If you look at IGV, things are getting absolutely hammered compared to like CHAT or whatever the generative AI ETF is. So I think, Dennis, we resolve higher. I think I'm going to need to chase in the growth portfolio the 20% that I have in cash. Because, for me, like I sold off pretty hard in November and December because I was so long the AI trade. So I'm still kind of shaking the shock or I guess I'm healing up a couple wounds, trying to stabilize a little bit and reach beyond the AI trade for particularly the fast money accounts. We have like Lemonade, they just did a deal with Tesla to collaborate on data. So it's an AI disruptor for the insurance industry. Bloom. I just put the hardware provider Ciena in. So it's like, what are back to the picks and shovels plate in the areas of the AI trade that the market's going to discover their shortages and do another SanDisk or Western Digital or Micron or something like that. So there's going to be undiscovered areas. There's going to be massive opportunities. Is the Mag 7 dead? No, I don't think so. I just think we're 2 years away from a clear answer. Are we going to have an ROI in the massive CapEx spend that these hyperscalers are putting out? And even if we chop around for a year, that's fine, because there's going to be a lot of second-tier companies that move into those areas of shortage. I think it's going to create a lot of opportunity.
I see you have one Guardant Health in here. Tell us what you like. The chart's looking pretty good. Tell us what you like about Guardant Health.
Yeah, I could even, if you want to share.
Sure.
Oh, yeah, do that.
Yeah, let's see here. Cancel. Oh, come on back. Where do we go?
There's a little plus at the bottom.
Share screen. Entire screen. Sorry, I should be better at this.
No, there should be a little spot that we can actually pick which one to say. So you would hit the plus, then you can go entire screen, but you should be able to pick specific windows too. We do see it on stage.
Here we go. Here's Palantir too, man. Heading into the print, I was so close to cutting this one. Sort of breaking up trend support here. I was like, I took a little.
The stock's loved. You got to consider that too.
Yeah. You know what? Can we actually look at Palantir? Can we stay on that, or are you guys?
Yeah. That's what they love Palantir. Stay with Palantir.
All right. So I mean, look at this in Palantir in terms of rev growth. I mean, in 25, they're at 883 in top line revenue, not just barely into EPS GAAP profitability. I mean, we're making 3, 6, 8 cents a share. looking to grow 200%, 700%, 200%. So we're going from 8 to 24 cents in, oh, wait, let me go actually annual. Sorry. Coming back here. Here we go. Here's what I'm looking at. EPS 41 cents in 2024, 75 to $1.31. I mean, I get the high valuation, but you're going to grow EPS 70. It might grow into its valuation. Like, and Gap is at 111 expected for 26, and then they're only $1.64, $1.45. Like, generating free cash flow, growing 75% EPS. And then, as I said, if you go to the point where they're not so reliant on government revenue, they could grow into the valuation. Look at the revenue growth on this. And
these are projections, obviously.
These are projections.
Where do those projections come from would be the question. Is this from guidance? Is this from analyst, commentary?
Both, all the above. Yeah.
All the above.
Yeah. I mean, and then like back to Bloom. Can I go there? Do you mind?
Yeah. Go Bloom. I like this.
So Bloom, come on, baby. Don't be shy.
You got to get off that dial-up, Todd.
AOL still works.
Memory shortage getting you right there.
I went to
too expensive.
I went to Mac. I went to the full Mac badass studio. Like I'm a fan. So look at Bloom Energy. Look at the growth here. I'll throw revenue and I'll throw percent change year over year. So I mean, we're doing 1.3, 1.4 billion top line in 2024 to 1.9, which is 29%. 26, they have you at 2.5 billion. And I mean, look at the growth over the next 2 to 3 years as the ROI and the hyperscalers really start to come on. I mean, yeah, sometimes 1, 2, 3 year out estimates have it right. Sometimes they have it wrong, but the market is trading 1 to 2 years out right now. And I think, I think the company's expected to go GAAP profitable from a loss of 18 cents this year to 68 cents for a 480% gain. Like, that's insane. Look at the swing and the profitability here with, let me take off revenue.
Like that growth, if it can do that.
If it can
can hit these numbers that are being projected here, some of these stocks that look expensive are going to look, if they can do that.
Dude, they lost 18 cents.
It's cool to look out. Like, this is what nobody does.
Sorry, I didn't mean to interrupt. What are you saying?
No, go. I like this. Keep going.
No, it's like, dude, they're going to lose 18 cents in 2025. They're going to make 68 to 23.57. I mean, what's the forward valuation? 2026, next 12-month normalized PE. Wait, where's my annual? Oh, got to go to annual. Next 12-month normalized price to PE. I mean, that's pretty insane. 180%, 180 forward PE. But if you're going to grow 400% earnings, and all these data centers are realize they got to go off the grid, like, you got to trust the trend here. I mean, this is where technicals are more important. You got to know the fundamental story. You got to have risk management. I mean, you look at Bloom on this breakout. Like, I've been adding Bloom like 4 times over the last month or so, with the big sell-off in AI, into the end of 2025, we did this double bottom at 76, and then we just quietly double, and the volatility in this thing's insane. We quietly double from 76 to 150, hanging on top of 150. Like, I think Bloom earnings come out next. When do they come out? Thursday, I believe. I mean, if we can get a pop anything with guidance, I mean, this thing should be above 2. What's that?
This Thursday.
Yeah. So they're looking for this Thursday, they're looking for 10 cents, which compared to the same quarter, Q4 would be a 71% drop compared to, they made 36 cents back in Q4. I got to look at that comp and figure out why that Q4 was so high with negative behind it. I got to figure out what comp they're looking at, but top line expected to go 10% to 627 compared to 572. So again, I want to figure out why that comp is so high. And then if they can come anywhere near expectation, the way the stock is acting technically, I think we should rip higher. I mean,
Todd Gordon,
Great.
Inside Edge Capital, because he's a skier, giving us not only a technical, a fundamental, but a sentimental look at the markets.
And we didn't even get to macro, guys.
This is how it goes. The time flies when you're having fun. Todd, get back on here. We'll have you back real soon. Want to continue this conversation. Love you, Todd. Awesome.
Love Shaq. Thanks, guys.
Oh, God. We're never going to hear the end of that one.
P52s, baby.
Oh, look at the dancing now.
Let's not
This
date
is
ourselves here. Okay.
Thanks, Todd.
That was fun.
Want to say thank you to our wonderful sponsor for pre-market prep, Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is one of the fastest growing Bitcoin miners, on track to grow even more this year. There's a QR code in the bottom right corner on the overlay right now. You can scan that with your phone. There's also a link in the description of this YouTube video. These will take you over to HiveDigitalTechnologies.com, where you can learn more about Hive. Thanks again to Hive.
And I mean, just continuing the Bitcoin conversation, struggling to bounce here. It needs, like, I was using iBit. I like using iBit because it's so liquid and easy to trade as a 1 penny spread all night long. So I trade this all the time. It needs to get back up over that 46, 47 breakdown area. So then we could potentially have the undercut and rally. But as long as you're below that, I think it's hands off. So the only reason you would be jumping into Bitcoin here is if we can reclaim that 46, 47 area. And then you start thinking, oh, maybe we do shake everybody out, hit those stops. Just as much as we were saying, it's due to break down because they don't hang out the lows as long. Sometimes they break down and then they do the old undercut and rally trick. So that's what you're hoping for if you're a Bitcoin bull. But right now, Bitcoin is just not loved.
Okay, that's a wrap on the Bitcoin.
Ethereum is the same thing. I mean, these charts are, like we've been saying, they're just trading right together perfectly. ETHE, something that I trade all the time as well. We were trading last night in the STN room. Very liquid. It's right there. It's the same thing, same technicals. But I mean, just the trend, not your friend here in any of this stuff. And this is the market. I mean, the market is buying what it wants to buy and selling what it wants to sell. And the trends are relentless. And even though the markets overall, to Todd Gordon's point, continue to go kind of sideways, S&P Qs, you have leaders and laggards and you have separation happening within. So when you lift up the hood, it doesn't look anything like a flat market. It looks like, oh my gosh, what's happened in the market if you're looking at stocks like Microsoft? And it's like, oh my gosh, what's happened in the market if you look at stocks like Micron? Completely tale of two markets when you lift up the hood.
Okay, 8:57. You know what time that is.
Rating the ratings, brought to you by The Fly, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new The Fly Pro platform with AI-powered company analysis with unique KPI charts for deeper insights. QR code in the bottom right corner. Also, a link in the description if you want to learn more about The Fly. Triple D and I have been using Fly for a while, but we've been using it inside the STN room, getting us some good color on ratings, and we can do that right about now. What's our first rating to start with, fellas?
Well, a very loved stock by the market for a very long time has been SoFi. And I would still say it's kind of like a Palantir. Like, this is a loved stock that retail's going to really have a hard time letting go of, even though the chart and the market is not liking SoFi, and it's dangerously, cutting through a lot of moving averages, which we can see on that right chart there, Joel.
Yeah.
But JP Morgan is saying buy the dip. They are upgrading the stock from neutral to overweight. They put a $31 price tag on it there. If you have the color here, Brentster, you can read from the fly here. They do have some color for us. So let's just see. SoFi is a weekend trade, one of those that I do almost every weekend, and usually is up because those weekend traders love SoFi.
And this is a little sneak peek into the Fly's platform here. A headline at 5 this morning. I want to point that out. 5 this morning, they had this info that JP Morgan had upgraded. You just click over here, the little read more button. You get some nice color. The stock has declined 10% since the fourth quarter earnings call on Friday, despite SoFi posting record results and better than expected guidance. The analyst tells investors in a research note, JP Morgan says the sell-off has created the entry point the firm had been waiting for. The momentum in SoFi's business is, quote, undeniable as the company continues to add new members and deposits at a record pace, according to JP Morgan. Thanks again to Fly for this nice color on SoFi.
23 bucks.
I'm torn. What do you think, Joel? Because I'm torn on this one, because this could be like a Palantir, where this is a stock you actually probably want to buy on the dip because it's eternally loved by the retail community, and it is a hell of a dip. You know, we're 10 points off the highs where we were back in October. You're talking about a stock down 35%, but then you're like, well, the market just doesn't like the stock right now. What's going to turn it around? JP Morgan trying to turn it around this morning.
Well, if you've been waiting for that 200-day moving average, which you haven't seen in eons, it's there, 22.74. It got below it yesterday. We'll just see. To me, 23 for the day. Look right, not left. See if you can hold, get through. I haven't even got through yesterday's high. You get through there. This is a tough bar. This is a really tough bar. There's going to be that on that day, 130 million shares traded. It dropped $2.50, had a huge range. So it's going to take a lot of heavy lifting just to get back. But let's see if we can sustain a bid over the 200-day moving average, which comes in at 22.74.
And then we have also a firm getting upgraded to overweight at Morgan Stanley. And a firm was a very loved stock for a very long time as well. But this is the tale of this market. It's like love, hate. And right now, a firm's moving it's moving to the hated camp. And I don't know if this is going to be enough to break out of this or not. The payment section, or the payment stocks, you know, besides MasterCard and Visa, which just stay steady as she goes. But some of these smaller payment companies really have, you know, not been loved at all here. And a firm trading down or trading up on the upgrade here, I want to say like it's a retail darling, and I want to say, yeah, this is a dip I'd like to buy. But then, you know, you look at technicals here and it's tough too. What's the color? Brent's on mute. You got it, Brentster. You're on mute.
A little color for your color here, Triple D, because this analyst is citing a compelling risk reward valuation, and we know we don't love those calls as far as rating the rating goes. When it's kind of a risk reward thesis by these firms, it's kind of a lame call. So in my opinion, we got a little bit of a lame call here, but let's let the analyst say the shares have impacted by a firm's growth slowdown and consumer credit concerns. Morgan Stanley believes that will prove transient for the company. The buy now, pay later category will continue to gain share within e-commerce, and a firm will be a key driver of that share growth. If you ask me, that's a pretty hot take, saying the buy now, pay later category will continue to gain share. But what do I know? I'm not a buy now, pay later expert.
Right. I mean, this gap between, you know, with AI and everything coming, people are going to need more credit. They're going to try to find ways. I mean, I just don't want a firm to become buy now and pay never, which is what we've joked about before. So that's the overall concern for me with the firm. But I don't know. Technically, Joel,
a lot of heavy lifting to do, even to get back to that 200-day moving average. But got a good number for you. You had a double top at 62.70. So if they slam it down, wow, it's up $1.83. Like to see if it comes back down to 62.70, 63, and then holds. I don't mind leaning on the low of the move here, which was made yesterday at $59. So I don't know. I like that they're buying the dip. I don't like Brent's. I'd call it a B. I'd rate this rating as a B.
So you kind of like it. B is pretty good.
Yeah.
Okay.
Yeah.
Okay.
B doesn't buy. This is not financial advice.
Dennis, you rate this one too. We all give a rating for this one.
Well, it's got guts, and I like the guts. I don't know if I'm going with it, but I'll give it a B as well. The B for the guts to be able to try to call a bottom here on a firm. Like I get like C minuses when they upgrade SanDisk today, you know, and like the stock's up like 300% in 3 months, and I'm like, this is like a D. Like this is like, you're upgrading it now. So at least you've got guts. I always like a good contrarian call. Me and Joe have been contrarians at hearts our whole entire trading careers. So I got to give it a decent rating just because I like it, but doesn't mean I'm necessarily going out and buying it today.
Gotcha.
That's it. So 9:04, we're going to go continue this conversation over in the STN Think Tank. If you're interested in joining, we've got the link there, stocktradernetwork.com, and we do have a code for all you PMP listeners there for a 10% off PMP STN. Come on over. The conversation continues. What's the schedule looking like today? We've got us, obviously, until 10 o'clock, and then we've got, what else do we got, Joel? Give us a little preview in that STN room today.
We got Mike Singleton coming on, working at investment bank to get very good with a longer term perspective on the markets. And we also have the closing print from 3:30.
Well, we've got stuff in the middle of that too here. So we also have Brentster.
We do. Prad, the Trading Edge with Trader Prad, 1 to 2 p.m. A fun little midday show.
Fun.
It's fun. Prad's awesome. But also he brings some intriguing ideas. So let's see what Prad's got to say today at 1 p.m., folks.
And then tonight we have a new show that we just started this week, 7:30 at night, the Money Mitch Swing Trading Show. He went all into robotics last night and went all through the robotics trade here last night. People really liked the content, obviously, and Money Mitch been a friend of ours for a very long time. So Money Mitch is on regularly 7:30 to 8:30 at night. So if you want content middle of the night here, we're bringing you that too over on Stock Trader Network. Come check us out.